to be here again on another valuable video on money, business, and investing. I'm the founder of the company, Master Investor. My name is Jose. If you're new to our channel, make sure you subscribe, turn on the notification button so that you get notified when we go live or upload a valuable video that will change your finances forever. Today, we're going to speak about the 10 controls of a master investor. It's going to be one of the chapters of our ebook, How to Build Cash Flow with the Internet, Turn Passive Income On. You can find the ebook on our website or Amazon. I suggest that you go straight to our website because you have additional assets that will come with that ebook by just getting it through our website. You have access to a virtual office that will give you access to once you download the ebook, and you will have access to other bonuses. And the more assets that we will add to that digital course, you will always have access to the assets regardless of the price going up in the near future. So it's a great deal for you. Go get it right now. I put the link in the description, and I'm going to briefly talk about what we have spoken on the last week. We're doing a 30-day challenge of these videos, so stay tuned. We're going to keep this going for the entire year because our mission here at Master Investor, of course, we are more than an investment management company, and our mission is to elevate the financial well-being of humanity through high-quality financial education made simple. We're looking for opportunities to build passive income and true wealth. We're going to give you the tools, the knowledge, and resources for anyone to take action to build the asset column with real assets that produce passive income and, of course, sometimes capital gains incomes. It depends on the asset class in which we are involved in, but we are building passive income primarily so that we have freedom and we can actually do more the things that we want to do in life. It's all about freedom at the end of the day. How much freedom, what type of options do we have available to us, and the more options we have, that means the more excess of cash flow we have, because the options go hand to hand with money. We cannot go far without money. That's why money is an important subject. We're going to talk about money all the time, and we're going to get our community comfortable talking about money because we all have an investor inside of us, and we need to bring out the investor out of ourselves and turn it into a master investor by living through passive income instead of a regular paycheck that people get from a 9-to-5 job or a regular job that pays them a salary or a hourly rate. We're going to focus on building assets, putting in the time to acquire or invest in assets that produce passive income, and like I said, capital gains income. Last live stream we did, we talked about the two types of income when it comes to investing. We also talked about, of course, there are three types of income that exist total, but are those three, two of them comes from investing. The first type of income that comes from investing is capital gains income, or the second type is passive income. Capital gains income is taxed at a higher bracket than passive income. So we need to focus on understanding the type of investment that we're getting involved in by doing due diligence, by understanding the return on investment based on facts instead of opinions, and decide whether we want to invest in a certain asset because either it's giving us passive income or it's going to give us capital gains income. If you're starting out as an investor today and you're wondering how you can acquire your first asset, then definitely download the ebook because it's going to help you understand the history of money, how it works, what's money today, and everything that we're talking about on these videos, because I'm just going through the ebook right now, but you'll have more information within the ebook. Of course, it has over 500 pages long of financial literacy with a total guide on showing you exactly how to acquire or invest on your first asset that will produce passive income or capital gains income. It will also give you detailed information on how to scale an existing business that you have today. And if you have many businesses, then you can apply all the same formulas that we share inside the ebook into those businesses to scale it and leverage the bottom line or the cash flow of that business, if there's possibility to increase the revenue. But most importantly, we're going to show you exactly how you can leverage those assets to buy you more assets and help you understand how to build more wealth by having businesses that will purchase other investments for passive income and capital gains income. Okay, so let's move on to, and then last stream we did was based on the different ratios and how to analyze investments. So go watch the replay on that, because we went into detail about the different ratios when it comes to investing. Gross margin percentage, net operating margin percentage, operation leverage, how to get those when we're looking at an investment. Financial leverage, total leverage, debt to equity ratio, quick ratio, current ratio, return on equity, right? We also talked about the financial ratios for investing in real estate. Does the property generate a positive cash flow? If yes, we have done our due diligence correctly, right? And we talked about due diligence being one of the most important words when it comes to investing, because it's not the investment that is risky. A lot of people that do not have the financial education, they talk about investments being risky, but it's not the investment that is risky, it's the investor behind that is risky. Because with financial intelligence, we actually manage risk and we minimize risk if there's any, because we manage it. We understand how the deal works, and we can apply strategies that are proven to work in order to make the deal work, in order for the numbers to turn out to be positive and to our favor. So we always invest to make passive income, to make gains, to make money, whether it's passive income or capital gains income, right? So cash on cash return, we talked about that. The different list, we had a list of due diligence. You can listen to it on our last live stream. Good debt or bad debt. Remember, two types of debt. Majority of people think that being debt-free is a way to wealth, and it's not. Actually, we encourage everyone here in our community to invest with debt, because debt is tax-free due to the fact that money is created with debt today. So look for ways to raise capital through personal credit, personal loans, business loans. Any type of line of credit that we can get our hands to should be to invest into an asset that will produce passive income, whether it's a real estate property, a digital website, digital asset, right? Or a business that we're going to be controlling with our entities, with our legal entities. It's always best to do business, if you truly want to build wealth, with legal entities. Every business or every asset that you control should be under a business entity. That way we can tap into the tax advantages that comes with being a wealthy entrepreneur, an inside investor, or a master investor. An inside investor is a master investor. And today we're going to go over the 10 different controls of a master investor. Since here, a master investor, we're encouraging everyone to be a master investor, and wealth is different for everybody. So a master investor is somebody that simply lives off passive income or capital gains income, and that's how he or she makes income, through investments. So they don't need a job, we don't need a job to create income or pay for our bills or pay for anything for that matter. We actually acquire assets. We're constantly investing, actively investing into acquiring more assets so that we can have more options. If we want something of luxury, if we want to obtain something, we first acquire an asset, we use debt, and we use our capital to acquire more assets that will produce passive income and capital gains income. It depends on what type of investment we're going into. And we talked about diversifying among the 5 different asset classes that exist so that we hedge for inflation and protect ourselves from down economies, because as a master investor, we always are making money even when the economy is crashing. Actually, we make the most when everybody's panicking and the economy is crashing. We find deals and opportunities that other people do not see because they're panicking and they're shrinking. We are always expanding here at Master Investor, okay? So there's not a roof of how much passive income or how much wealth we can build. It's up to you to where you want to build your wealth. However, a master investor is someone that controls one or more assets that will pay for the entire living expenses and continue to thrive using passive income and capital gains income. So bad debt takes money away from us, then good debt makes us wealthy because the debt gets paid on its own, and it's making us wealthy because every time we make a payment to the bank or the lender who give us the loan, we are also paying our company, ourselves, because whatever is left from the generated cash flow to pay for that debt is ours. It's positive cash flow for us. So that's what we're looking. Infinite return on investments when we have no money in a deal and we're getting money for nothing. We're basically printing money from thin air because we are controlling debt that is making us wealthy. Good debt. All right, so let's go down to the 10 controls of a master investor. Number 1, control over ourselves. Number 2, income expense ratio, asset or liability ratios, management. Number 3, management of the investment. Number 4, taxes. Number 5, when we buy and when we sell. Number 6, brokerage transactions. Number 7, ETC. It stands for entity, timing, characteristics. Number 8, terms and conditions of the agreement. 9, access to information. 10, giving back, philanthropy. Number 1, control over ourselves. The most important control we must have as an investor is control over ourselves. It can determine our success as an investor, and is why the entire first phase of the ebook is dedicated to getting control over ourselves. It is not the investment that is risky, it is the investor who is risky. Most of us were taught in school to become employees. There was only one right answer, and making mistakes was horrible. We were not taught financial literacy in school. It takes a lot of work and time to change our thinking and to become financially literate, but the reward is freedom, as I said earlier on this video, which is priceless. An inside investor knows that there are multiple right answers, that the best learning comes through making mistakes, that financial literacy is essential to be successful. And when we say committing mistakes, it's not about doing stupid mistakes. We can learn from other people's experiences so that we avoid stupid mistakes, but we can also learn from our mistakes by paying attention to the mistakes that we're making along the way, so that the mistake or the situation does not repeat itself. Okay, so we want to learn the lesson behind each mistake so that wisdom sits in and we earn the blessing of that mistake. We can always become wiser. And it's up to us to make great decisions every day. So we need to focus on our days, every day, focus on building and creating good habits and taking great action by tapping into the best decisions that we have in front of us. Like, we have a buffet of decisions to make every single day. You can go to the gym, you can go hang out with friends, you can read a book, you can do all of these things. What are you choosing to do with your time is what makes a difference in the future. So what are we doing today to make us wealthier? What type of investments are we looking at to invest in to make us wealthier? It's very important, and I want you to understand that, okay? We know our own financial statement, and we understand how each financial decision we make will ultimately impact our financial statement. We're always thinking about growing wealthier. To become wealthy, we must teach ourselves to think like a wealthy person. Investor control number 2. Control over income or expense ratios and asset or liability ratios. This control is developed through financial literacy. We will demonstrate 3 cash flow patterns the poor, middle class, and the wealthy have. In cash flow pattern of the poor class, you will have the diagram inside of our ebook. So go ahead and download the ebook, link in the description, like I mentioned earlier in this video. So the cash flow pattern of the poor class is basically they have a job. The cash flow, the income goes from their job, right? It comes from their job, goes into their income column, down to the expense column, and out to somebody else's asset column. And the expenses are like taxes, mortgage, car payment, credit cards, etc. Cash flow patterns of the middle class. They own a job, they have salary, or they have a paycheck, like an attorney, dentist, accountant. They have to show up to see clients in order for them to make money. They get paid by the hour too. So their income comes from either owning a job, owning a small practice that they have, or working for somebody that has a small practice and they're just getting a high salary. So it comes from working for money. They're exchanging time for money still. So the income goes to the money that they made, it goes to the income column. It goes down to the liabilities column, because that's the difference between the poor and the middle class. The middle class, they have more liabilities, or they have liabilities, and the poor class do not. All they do is live paycheck by paycheck. The middle class have maybe some sort of credit so that they can obtain liabilities such as credit cards, school loans, car payment, and any luxury that they may have that they're paying per month based on bad debt, on credit that takes money away from them, basically. It's not making the money. So, and then it goes down from the income column to the liability column, up the expense column, because all those liabilities have expenses, and then now it goes out to somebody else's column. Individuals in the middle class accumulate more debt as they become more successful in their business or in the jobs that they own, okay? And they accumulate bad debt, to be specific. There's nothing wrong with accumulating good debt. In fact, we encourage everyone, again, to acquire more good debt, to be okay controlling debt. And if it's a personal credit that you have, a credit card, then invest it into an asset, start a business, do something with that money that will work and will pay on its own by generating cash flow from the business that we invested the debt, the credit card into, okay? And the interest rate and all of that's going to be paid with the generated cash flow that is making on autopilot. Okay, so the cash flow pattern of the wealthy class. Basically, the income is passive income, positive cash flow, and capital gains income from assets that we control. And that's how our income comes in, is from the asset column, not from a job, not from a paycheck or salary. We control real estate, stocks, businesses, intellectual property, we're getting dividends, etc. And then now crypto, commodities, right? And now that is paying us into our income column, and then from there it goes into a liability column, and it goes up the expense column. And a lot of times we can turn many of the expenses into our assets as well. Can we explain that in detail in the ebook, and as much on other videos that we have done, where we can turn a liability into an asset that we have. Maybe we control a luxury, a car, or even a jet, right? We have a helicopter, right? And we're paying a mortgage on that, a loan on that. We're paying it back per month. Now we have to really focus on maybe renting that out, turn it into a business. When we're not using it, we're renting it to other people, and so we're getting positive cash flow from it, and we still be able to use it whenever we want to. Well, at least when it's not rented out, but at least it's making us money at the end of the day. And that's the most important thing, that expense goes back into our asset column, because all the expenses and liabilities that we have, if it's not our assets, if it's not paying us back, then it's somebody else's asset column, okay? So the wealthy, we have our assets work for us. We have gained control over our expenses and focus on acquiring or building assets. Our businesses pay most of our expenses, if not all of them, and they have few, and if any, personal liabilities. We have decided here at Master Investor that all partners will have the cash flow pattern of the wealthy person. Someone may have a cash flow pattern that is a combination of these 3 times. What story does our financial statement tell? When you go and download our ebook, you'll have access to one of the assets in that ebook, which is a financial statement. I want you to download the financial statement into your Excel or print it out and fill it in with your information. Figure out where you are financially today. You need to look at your life on paper financially. Like, where are you? What type of income are you making? How many liabilities you have? What are the expense column look like right now? There's nothing wrong with having expenses or liabilities as long as we have plenty of assets that will produce passive income for us. Buy or acquire assets and only acquire liabilities when you have an asset set to pay for that liability. A master investor buys assets that put money into our pockets. It is that simple. Turn personal expenses into business expenses. A master investor understands that businesses are allowed to deduct all the ordinary and necessary expenses paid or incurred for the business. They analyze their expenses and convert non-deductible personal expenses into non-deductible business expenses whenever legally possible. Some examples of personal expenses that could be legitimate business expenses are computer, business equipment, phone, business equipment, meals, business meals, medical expense, medical reimbursement, tuition, education, home costs, home office. Not every expense will be an allowed deduction. Review our businesses and personal expenses with our financial and tax advisors so that we can maximize the deductions available to us through our businesses. Investor control number 3, control over the management of the investment. An inside investor who owns enough of interest in the investment to control the management decisions has this type of investor control. It can be as a sole owner or where the investor owns enough of an interest that he or she is involved in the decision-making process. The skills learned through building a successful business using the cash flow triangle are essential to this investor control. Once the investor processes the skills, he or she is better able to analyze the effectiveness of the management of other potential investments. If the management appears competent and successful, the investor is more comfortable investing funds. Investor control number 4, control over taxes. A master investor has learned about the tax laws either through formal study or by asking questions and listening to good advisors, good professionals. The right side of the cash flow circle provides certain tax advantages that the sophisticated or the master investor uses thoughtfully to minimize taxes paid and to increase tax deferrals wherever possible. In the United States, those in the business owner and inside investor side, or the right side of the cash flow circle, enjoy many tax advantages that are not available to those in the employee and self-employed side, or the left side of the cash flow circle. Okay. 3 specific advantages are Social Security, social insurance taxes are not deducted from passive income and capital gains income, but are deducted from ordinary earned income, people that are on the left side of the cash flow circle. It may be possible, number 2, it may be possible to defer payment of taxes perhaps indefinitely by using the laws available to us related to real estate and owning a company. An example would be a profit sharing plan sponsored by our business corporation. Number 3, C corporations may pay for several expenditures with pre-tax dollars that the employee side or the left side of the cash flow circle income recipients must pay for with after-tax dollars. Some examples are included under investor control number 2. A master investor recognizes that each country, state, and province have different tax laws, and we are prepared to move our business affairs to the place best suited for what we are doing. So that's why it's important to know a little bit about the tax code, the tax law, so that we can acquire the right business attorney, the right accountant, so that we can build a successful team around our businesses to minimize taxes all the way to zero, to take advantage of the laws that are in place to benefit the wealthy entrepreneur and the inside investor, the master investor. So the more we understand about business, the better we're going to do our investing, and that is a guarantee. Recognizing that taxes are the largest expenses in the employee and self-employed life, inside investors may well seek to reduce our income in order to reduce income taxes while increasing funds for investment simultaneously. So, we use the business to fund our lifestyle, to pay for everything, and even though we may look like we have not made anything, we still are thriving through passive income and capital gains income. Investor control number 5, control over when we buy and when we sell. A master investor knows how to make money in an up market as well as in a down market. In building a business, a master investor has great patience. We sometimes refer to this patience as delayed gratification. A master investor understands that the true financial reward is after the investment or business becomes profitable and can be sold or taken public. And when we take a business public, that's when we become the ultimate investor. An ultimate investor is a master investor, but the inside investor, which is right before the ultimate investor, which is level 4, and then 5 is the ultimate investor. The different categories of investor that exist, there are 5, right? So we want to thrive to be an inside investor because that's a master investor. The only difference between an inside investor and master investor is that the inside investor has not taken a company public yet. So at some point we have to do that. Investor control number 6, control over brokerage transactions. A master investor operating as an inside investor can direct how the investment is sold or expended. As outside investors in other companies, sophisticated investors carefully track the performance of our investments and direct our broker to buy or sell. Many investors today rely on their brokers to know when to buy and sell. These investors are not sophisticated nor master investors at their craft of investing for cash flow. Investor control number 7, control over the ETC, stands for entity, timing, characteristics. Next to control over ourselves, the control over the ETC is the most important control. Master investor would repeat often to have control over the entity, timing, and characteristics of our income. We need to understand corporate, security, and tax law. Master investor and our partners truly understands the benefits offered through choosing the right entity with the right year and converting as much ordinary earned income into passive and capital gains income as possible. This combined with the ability to read financial statements and to think in terms of financial statements helped master investor build his financial empire more quickly. To illustrate what proper ETC planning can do, let's review the following case studies. And then you can have those in the ebook, so download the ebook. Okay, let's move to the next. We talked about what was a personal financial statement last week too, so you can watch the video on that. It's going to teach you a lot. Okay, so let's go to investor control number 8, control over the terms and conditions of the agreements. A master investor is in control over the terms and conditions of agreements when he or she is on the inside of the investment. For example, when we rolled over the sale of several of our small houses into a small apartment building, we can use a section called 1031 exchange, which allowed us to roll over the gain and defer taxes. We did not have to pay any taxes on the sale because we control the terms and conditions of the agreements. Investor control number 9, control over access to information. As a master investor, the sophisticated investor again has control over access to information. This is where the investor needs to understand the legal requirements of insiders imposed by the SEC in the United States. Other countries have similar oversight organizations. Investor control number 10, control over giving back philanthropy. That's why I always say become more generous, because it's one of the controls of a master investor. We have to practice generosity. The more we give back, the more we should receive. Same thing with providing value to our customers through our companies, right? The more value we provide to them, then they're going to tell their friends and the people that they know, and they're going to do business with us because they are appreciating the value that we're providing. And same thing with society. When we have excess of cash flow, we have to invest into causes that we believe in them, and because we're passionate about certain organization that is helping humanity become a better place, or we can build a non-profit organization ourselves. But remember, it's all about the team behind it, because people will not give money into an organization that has not a team behind it. Focus on building a great team with great people, great specialists, and great advisors that can help us fulfill the mission of the organization and impact the world in a positive manner. A master investor or an inside investor recognizes the social responsibility that comes with wealth and gives back to society. This may be through charitable giving and philanthropy. Some of it will be through capitalism by creating jobs and expanding the economy. That's what I have for you today. I appreciate you being here on another live stream of our community. Go to our website, download the ebooks. We have 2 right now, the 10 new rules of money and how to build cash flow with the internet. Take massive action. What is going to be your first asset that you're going to invest or acquire? We have other products that you can take advantage on our website. If you need a live consultation, please let us know. We have a product that can help you reach out to us via Zoom, and we can do a mastermind, and we can get things on track so that you can figure out where you are financially, what ideas, what roadmap we can build in order to build your first asset that will produce passive income or capital gains income. Take massive action. That's key. We need to take action right now in order to have new results in the future. If you continue to do the same thing over and over again, you're of course going to get the same results. So if you're not liking the results that you have with your finances, then that means you need to invest in your financial education, get in a call with one of our team members here at Master Investor, and begin to invest in your asset column, because that is how not only you're going to escape the rat race, but if you're not in the rat race, if you don't have a job, maybe you have a business, and this is a way for you to also scale your wealth to the next level. There's always a new level. We can always get wealthier. So learn how to give back, understand the 10 controls of a master investor that we talked about today. Let us know if you have any questions. Drop a comment below. Stay great and wealthy, bringing you the good and bad news of money, the business principles that work in all economies. Bye for now.